We're super excited to have everybody here.
Okay, cool. Well, first of all, thanks to you two for organizing this. It's a lot of work to put an event together. So thanks for spending the time on it and making it happen. And thanks for inviting me and letting me chat with your audience. So hi, everyone. Good morning. It's noon here in New York. I am in Manhattan in my office. You can see I have my little stuffed animals with me in my little crypto memorabilia museum, it feels like. I even have a 21 Bitcoin computer up there, if anyone can spot it, and one of the original bit seeds, if anyone remembers those from 2015. But I'm really excited to be here. And the reason I bring up hardware is today what I wanted to talk about and what I thought it might be interesting for everyone is if we talked about where this is all going. It talked a little bit about what's happening in the broader economy and the sort of the mass shift we're seeing in where value is accruing in our stock market, in our capital markets, and how the way people think about investing and allocating capital is changing, and what that might mean, not just for us as people who are excited about cryptocurrencies or maybe invest in them or work on companies and platforms that provide access to them and make them more useful, but also what that means for governments, for policymakers, and for the global geopolitical climate, which I think over the last 3 months has been on everyone's minds. So with that, I am going to share my screen. Conference hosts, you have disabled attendee screen sharing. If you could kindly allow me to share my screen, I will throw up my presentation. So,
Yep, I'm getting that for you right now.
Cool, thanks, Jeremy.
Absolutely.
We can use public-private key pairs, but using video conferencing technology, not so much. It's fine. We got this. All right.
Okay, you should be good now.
I am all good. Thank you. All right. And I'm going to go into my little slideshow. Okay, super fun. So, as I mentioned, what I want to talk about is just, oops, why is it doing this? What I want to talk about is where the Bitcoin industry is going and how it ties sort of to the macro environment. So I'm going to talk about this concept of integration. Disclaimer, disclosure, not investment advice. This is simply information. You can read this at will, but my lawyers say I have to put this up. Okay, so let's start kind of big picture. I think we have about 40 minutes. I'm going to try to talk for like 25 or so, and then we can have a conversation about some of these topics. So just laying out the roadmap there. So if we look at the macro environment, one thing that I think is really interesting, and we put this in our crypto trends report that we published in November. In 2009, when I graduated college, I worked in the oil industry. I thought I was going to go work on Wall Street, but as a result of the financial crisis, those jobs that I thought I was going to go into no longer existed. And I ended up going into, which at the time was one of the largest industries in the world, into the oil business. And if we look at the largest companies in the world, a decade ago, they were by and large companies that produced physical things. ExxonMobil, PetroChina, Petrobras. The companies that dominated the market 10 years ago were companies that made physical things and companies that interacted with money and payments. And combined, the market cap of the 10 largest companies in the world at that time was $2.3 trillion. 10 years later, the largest companies in the world are not chemicals companies or petroleum companies. They're really not banks either. The largest companies in the world are digital overlords. They are people who, and firms who control our ability to access, compute, and connectivity. So if you look at the FANGs today, Facebook, Amazon, Apple, Netflix, Google, these 5 stocks if you didn't know, they make up 22% of the entire S&P 500. So just 5 companies account for almost 1/4 of the entire stock market. That's a pretty mind-blowing fact. And then if you look at the other companies here, Visa, JP Morgan Chase, Alibaba, these companies are, with Alipay, these companies are really companies that are digitizing finance and control the flow of payment networks and money around the world in this digital form. So the world's largest companies today are almost 3 times more valuable because over the last decade, returns to capital have far outstripped returns to labor. People who own stocks have accumulated far more wealth than people who work at these companies. And the most powerful companies in our world have gone from being producers to being gatekeepers. And I think that's a really important concept to keep in mind. So this revolution, or really evolution, is going to march on. So my belief is if the first decade of this millennium was about energy, industrials, and banking, this next decade was about internet, tech, and payments. The future, I think, is about energy, computing, connectivity, and finance. And I'm going to talk a little bit about what that means. I don't know how big this market will be, but if, it's anything like what we've seen to date, and with the sheer amount of money printing that's going on around the world, I think we can anticipate it's going to be a whole lot larger than 7.5 trillion. But here's what I think is so important to think about. Companies and countries are going to spend trillions of dollars on research and development, intellectual property, and physical infrastructure that is needed to secure their data and their ability to access global systems. And if you look at this, it's already happening actually. In the last few weeks, you've seen a number of announcements that semiconductor companies who make the chips that power our electronic devices and enable them to do all of the compute they do, chip companies, semiconductor companies have historically been located in other parts of the world. They're now being onshored to the US, and a number of new facilities are being built in the US to bring chip manufacturing back to America. That's a great example of how important this is becoming. AWS, one fact you may not know, is actually the largest military contractor. It's not Raytheon. It's not a company that produces weapons. It's a company that secures data and information on behalf of the military and the US intelligence agencies. So I think this really interesting shift is happening where compute and connectivity, security, these things require energy, but it's really about securing and protecting data and systems. And obviously the most important systems in most economies today are financial systems. There are capital markets, there are trading systems, they're the ability for people to transact and transfer capital. And so what's going to be really interesting to look at is how this all plays out and where Bitcoin fits in. So now I'm going to take you back about a millennium, maybe millennium and a half. I want to take a step back into the oil industry, and we're going to take maybe 5 minutes to talk about this. Background, I spent my early career in the commodities industry. When I was in college, I was a trader. And so what is so interesting to me is the oil industry actually provides really informative lessons as to what might happen with the Bitcoin industry, and has been a really important driver of economic growth, and in large part, in my view, has shaped the state of the world today, politically, economically, legally. So let's talk about it. So the first really modern monopoly that the world saw was a company called Standard Oil. In 1863, a man named John Rockefeller acquired a small refinery in Ohio. Spindletop in Texas had just been found, which was the first sort of big oil field onshore here in the US. And what Rockefeller did is he built this refinery in Ohio where a refiner takes in crude oil and they turn it into petroleum and other products that people can use, because you can't use crude oil that comes out of the ground. And what Rockefeller did that was so brilliant is he acquired a bunch of other refineries, and over a course of a few years became the world's largest oil refiner through these acquisitions. Then what Rockefeller said is, wait a minute, why am I paying rail cars and railway owners to transport the oil to me from Texas? Why don't I buy interest in a railway and then I'll set the rates for all oil companies? And so what he did is he forward integrated into the transportation and logistics supply chain and started taking over that industry. Then he said, wait a minute, why am I paying oil producers for oil? Why don't I produce my own oil? And so Standard Oil became an oil producer and started actually operating wells. And over time, what you really saw is through this type of behavior of acquiring and integrating in order to streamline and cut costs, really what you saw is the emergence of the first monopoly. By 1904, Standard Oil controlled 91% of the global oil refining market and 85% of global petroleum sales. That's huge. Today, you know, we would dream of that kind of capture. And by the way, Amazon's pretty close. AWS has 80% of the cloud compute market. But this was really an unprecedented sort of way to think about business building and how these different components of the value chain fit together. And so in 1911, in a landmark court case, Standard Oil was actually broken up through a series of antitrust laws that were passed, and it became 34 different companies, which would go on to become the big oil companies that we know today. And the reason I tell the story of Standard Oil is I think it's helpful to remember that power, what gives platforms, companies, people power, is scale, control, and influence. And it's going to become really relevant in this new world of cryptocurrencies that we're talking about. So fast forward about 80 years in the oil industry, and what happened? So for a long time, the oil industry sort of hummed along and the world continued to industrialize and consume more and more petroleum products. And then in 1973, something happened. Oil companies all of a sudden found, due to the oil embargo crisis of 1973, that their supplies were reduced and prices were doubling or tripling as a result. Increasing demand, supply decreasing. And so what this did is it created massive, massive issues for oil companies. There were shortages, and this industry had really high costs. And so it was really, really damaging because these oil companies couldn't use their very expensive refineries, their expensive ships to ship this oil around. And so oil producers took a look at this and said, wait a minute, instead of buying oil on the open market as we need it, why don't we put together a plan so that we have access to a steady supply of oil? And why don't we make sure that we have the ability to create some stability in our revenues and our profitability through buying and selling feedstock and end product. And so really what this was is the start of the oil market and the oil futures market. And so oil trading really started this new twist on an old industry by financializing it. I won't talk about this, I'll share these slides, but really what oil companies sought to do, so there's this entire value chain I've mapped out here from exploring, drilling, producing, all the way through to refining and delivering a product to customers, where there are a lot of different steps and a lot of different companies and variables. And so really what oil producers tried to do by integrating and owning this entire chain from start to finish is manage and minimize risk, reduce variability in profits, increase profitability, right? Because if you own every step of the chain, then you can adjust transfer prices between each layer of the chain to optimize your profitability. And then really the other important component was monetizing information asymmetry or transaction cost asymmetry. So how does this all fit together? I was a consultant in my old life, so I love a good framework. Here's the framework I want to share with you. So on the left, here are all of the different stages of production. So the way that people integrate typically to create scale is they can backwards integrate. So that's the example you see here in orange, where you start at one point in the life cycle and you integrate into the earlier and earlier stages of the life cycle. Here in blue, you see forwards integration, where you go into the forward steps of the life cycle. What you get if you do both is you build a vertically integrated firm where you own the entire chain from top to bottom and everything's integrated in one sort of stack. And the other option you have, which is what Rockefeller did in his early days, is to integrate horizontally, which is this green sort of set of boxes here, so that you own one entire layer of the value chain and you get to monopolize in that layer. Why am I explaining this? It's going to become relevant later. Okay, so here's what really happened to the oil market, which is what I think so interesting to sort of look at and think about. So here's what you see on this chart. It's the oil price from 1986 through 2010. And on the top, you see long positions and short positions, right? So you started by only being able to trade oil spot, meaning you could only buy oil as an actual barrel of oil. And with the introduction of derivatives, what you could do is go long, meaning you wanted to own oil in the future, or go short, meaning you wanted to sell oil in the future. The orange you see is net position, meaning what's the sum of the net short and net long position. So when you add it all together, is the market net long or short? And then the blue line you see is all of the open positions as a percentage of the total market. And then on the bottom, what you see in purple is the futures price. Okay, here's why this gets interesting. At a certain point, when you start creating derivatives, the physical market gets decoupled from the speculative market. And that's really what happened to the oil industry going into the 2000s. I was working in the industry at this time. I traded ethanol and methanol at a family office in Houston while I was in college, and we directly saw this happen. As more and more participants in the market started to trade oil, what they started to do was first optimize their selling and buying, optimize their value chain, but then they realized, wait a minute, we can actually make money if we trade. And eventually most energy firms built pure financial speculative trading arms to trade the underlying assets they were producing. And so what happened as a result is the physical market for oil stayed the same size, but the futures market ballooned in size. And as a result, the price of oil, A, became more volatile, but B, also became detached from the underlying supply-demand dynamics for oil. And the reason I talk about this is the energy market was really the first market to become fully financialized. Before we segue into Bitcoin, I want to talk about a controversial company that really is important to understand in the energy industry, which is the company Enron. Now, most of you've probably heard of Enron because you read or watched Smartest Guys in the Room. You know about the accounting scandal that went on at Enron, and you kind of know it as like one of these great financial scandals. But Enron, in my view, is actually a really innovative financial services company that grew from physical trading to electronic trading and actually built an online marketplace that accounted for 25% of all energy trading in the US in the 2000s. What's really cool about Enron, and ultimately I think was part of the issue, is Enron had this view of the future that you could create a market for anything. So they started by thinking about creating digital markets and new digital products for the energy industry. But they had this vision that in the future, anything that people consumed, there was supply for, would become a quote unquote digital commodity. So for example, they actually wanted to build a marketplace to trade high-speed internet bandwidth and to trade data storage capacity. If anyone here is a data center geek or a capital markets geek, you'll know that over the last 2 decades, numerous people and firms have tried to create a market for cloud compute derivatives, et cetera. And the other thing that's really interesting is Enron actually tried to build Netflix before Netflix. They tried to partner with Blockbuster in sort of their heyday to deliver movies via this high-speed network, and they thought, hey, we could buy these digital commodities to hedge the cost of delivering these movies by going net long or short bandwidth, and then we could buy capacity futures and build this really beautiful financialized like digital marketplace for how we deliver connectivity to people. So this is sort of the bridge I want to use to get into the crypto side. And hopefully you weren't too bored by that little delve into history. So here's a great quote. I've always said, you know, there's nothing new under the sun, but I didn't realize until recently that it's from the Bible. And the quote is, what has been will be again. What has been done will be done again. There is nothing new under the sun. So at this point, you probably know where I'm going to go with this, but I think that what's happening in the Bitcoin industry and what's happening in the broader crypto ecosystem will start to resemble what we've seen in the traditional commodities space, and that this rise of integration, which has been happening over the last 5 years that I've been in the industry, is only going to start to accelerate, and it's going to lead to some really interesting outcomes, which I'll get to at the end. So let's just quickly talk about the growth of the Bitcoin ecosystem. I think one thing that a lot of us don't appreciate, you know, we're all online and we're talking to each other in digital space, but the Bitcoin network, first and foremost, depends on physical infrastructure. In order for the Bitcoin network to operate, people need to be willing to spend money on silicon in the form of ASICs. They need to be willing to spend money on energy in the form of electricity that powers these ASICs. And effectively, the Bitcoin network is one of the largest private compute and telecommunications networks in the world. There are billions of dollars that get poured into the Bitcoin network every year to maintain its security and its immutability, which is what makes the Bitcoin network such a valuable way of managing money, right? It's basically an open, permissionless money network that is secured by the laws of the universe, the laws of thermodynamics, and the value of energy and compute. So I think conceptually that's really interesting. And once the Bitcoin network got built out, it started with people building networking infrastructure. It started with the first block being mined, which had, that famous newspaper headline, embedded in that first block. But the Bitcoin ecosystem, everything we've built at its core relies on physical infrastructure. It's where digital space meets meat space, which I think is something we can't underestimate. And I think a lot of times, when we're running around and we're interacting with our phones and our laptops, we forget, because there are no wires. You're not like running a generator in your office. You're not physically interacting with your router. In most cases, most people don't even know how their router works. We forget this, but these digital networks, they have physicality, and this is a really important thing to keep in mind. And then once that physical network has been built and becomes more secure, you start to build a variety of products, platforms, and services on top of it, on and off ramps, payments and transfers technology, new types of markets and financial infrastructure, developer tools, and then all sorts of new applications. But at its core, without the Bitcoin network, Bitcoin doesn't exist. And I think you can't forget just how important this is. So for the first 5 years, Bitcoin was really consumer driven and driven by startups focused on consumers. Over the last 3 years, Bitcoin has been very institutionally driven, although I would argue the success of that has been mixed to date. And now the era we're entering into is we have central banks talking about Bitcoin. We have the IMF talking about Bitcoin and digital currencies. And we're starting to get into this era where I think governments are looking at the national security implications of Bitcoin as it becomes, a money network that has more value, more use, and potentially, is going to be more significant in the global economy. So that's like, maybe that sounds crazy to you. Maybe you listen to that and you say, maybe, there's some merits to that. So let's delve into what this means. So the way the Bitcoin value chain works at its core, in oil, you start with exploration, then you find a resource, you drill a well, and then there's this whole value chain that ends with you going to the pump, putting in your credit card, and putting gas in your car. That point of putting gas in your car, there's a whole string of things that happen before that point that are the value chain. Same thing in Bitcoin. Today, if you go on a Bitcoin exchange and you put in a wallet address and you put in an amount and you hit send, it magically sends, but there's a whole range of stuff that has to happen, which is the Bitcoin value chain. So at its core, the Bitcoin value chain is fairly simple. You create a transaction and you sign it. That transaction gets broadcast to the network, and that's a peer-to-peer network of nodes that can be run by individuals, entities. We now have some countries potentially running nodes, like I'll wink, wink there, who knows? Then we validate the transaction, right? So the transaction gets validated and propagated, and then once it's been propagated, that transaction is mined into a block, and then it becomes part of the ledger, and each subsequent block that gets mined sort of crystallizes that transaction, and that's what gives the Bitcoin network this property of immutability. And so at each stage, if you look along the bottom here, there are different companies who are providing products and services that allow you to do these steps of the value chain. And in some places, it's visible to the consumer, but in a lot of places, it's hidden from the consumer and the end user. And, I'd be curious to know when we get to our conversation later, how many of you have, created your own transaction, pushed it to the network, how many of you run your own hardware. So that's why I have, my 21 Bitcoin computer and my Bitseed here. I'm actually putting my laptop on top of my coin mine right now, but and I have a Casa node at home. There are a variety of different ways you can run your own node. But I think what's been really interesting is a lot of people, are only at the end point of the value chain where they're consuming a product or service that abstracts this all away. But without these steps happening, you wouldn't have a Bitcoin transaction. And what I think is interesting to know is that at the end of the day, what we really rely on is this process of the transaction getting batched into a block and getting mined. And so this physical component, right, of using electricity and using ASICs and expending energy is critical in securing and maintaining the integrity of the Bitcoin network. So here's what's cool about the economics of Bitcoin. No matter how efficient you are, you can never produce more Bitcoin than the block size reward. So if we think about ways that people in the Bitcoin industry can sort of optimize the way they interact with this value chain, what's important to remember that makes Bitcoin so unique, if you're an oil producer, you can go out and you can find more resources. You can also create new technology like hydraulic fracturing, or fracking as people call it, that allows you to produce take reserves that were previously infeasible to access, is not economical, and make them accessible through technology. So you're actually changing the accessible supply of oil. Same thing, drilling in the Arctic Circle, right? Historically, you wouldn't have been able to do that. Now you can drill through 2 miles of permafrost and produce assets in the Arctic Circle. You can't do that with Bitcoin, right? You can never mine more than 12.5 Bitcoin per block. It just doesn't work. So the ways that people are going to create opportunity in Bitcoin is through technology innovation. So protocol level innovation, hardware innovation, layer 2 optimizations, things like Lightning Network, changes in routing logic, how transactions are batched and processed, and then also privacy and data obfuscation. I've been following a lot of the work that Wasabi and Samurai Wallet have been doing around coin joins, Whirlpool, and other sort of technologies that attempt to obfuscate transaction histories. There's business model innovation, right? You can try to control your transaction costs. You can try to minimize the variability of fees that you pay to submit your transactions to the mempool and have them prioritized in terms of when they get mined. And then you can try to optimize your profitability. And then there is, of course, my favorite lever, which is financial innovation. Historically, the only financial market we've had is the price of Bitcoin, right? We can create a market around the price of Bitcoin. Historically, you could only go long. In 2015, right, you buy spot. Then we saw the introduction of derivatives. You could go long, you could go short. Now there's a robust market of different options products, futures products that are either cash settled or Bitcoin settled that have created a really robust marketplace for the price of Bitcoin. I think the next market that's emerging that's really interesting is we're also now creating a market for energy inputs. So if you look at a lot of the new mining plays that are emerging, they're co-locating facilities in regions where there are trapped power, where there's hydraulic power, wind energy, maybe dislocated energy that doesn't have a end market that's going to consume it. And so people are optimizing for the cost of energy and attempting to convert energy into money. So this is kind of an interesting application of the laws of thermodynamics. Monetary value is a form of energy, so converting, electrical energy into monetary energy, I think is a really interesting concept we can explore with Bitcoin. We're starting to see the starting phases of a market for mining difficulty. So there are a few different markets where you can trade a hash rate difficulty product. So basically you can sort of, hedge yourself against the hash rate becoming higher, meaning it's more difficult to mine a block, and the mining market becoming more competitive. And so that market of hash rate derivatives has started to develop. There's things like PowSwap. There's things like FTX's perpetual hash rate derivative, but this part of the market's starting to grow. And then the market that will eventually emerge, in my view, is a market for transaction fees. So if I'm an exchange and I know that on an average basis, I submit 1 million transactions a day to the network, and I know how much that costs me, I can find ways to optimize that through batching, but I can also potentially, buy some sort of contract that allows me to hedge transaction fees or optimize transaction fees, or buy forward capacity on the network, or buy different sort of tranches of prioritization on the network. So again, what I think is really interesting here, if we look at analyzing integration in Bitcoin, and I apologize, there's a lot going on this slide. If we look at this value chain, right, you can integrate forward from the start of creating a transaction all the way through to verifying a transaction, or you can integrate backwards. And we're seeing that, right? Bitmain has created, this new company, Matrix Port, that has an exchange. So they're kind of going from the mining side and backward integrating into the exchange side. we're now also seeing companies that are in sort of the application space, companies like Blockstream, for example, forward integrating and running their own mining facilities. I think it's really interesting that Fidelity is big in the mining space, and my friend Amanda Fabiano, who runs Fidelity's mining operations, is a fascinating person to chat with. You know, as a traditional financial services firm, you know, they're sort of investing across the stack, which I think is really indicative of where this will go. But underpinning all of this is a strong layer of financial engineering through these different types of products that can get created to help people optimize how this value chain emerges, but then also creates opportunities for financial speculators, traders, and other types of individuals who would want to participate in these markets. So look, I'm almost done, I promise. I know I've talked a lot. Bitcoin's interesting because it's been a financial asset from day one. And we're actually now at a point where spot volume, you know, historically spot volume, you know, has increased over time, meaning the volume that's traded, you know, in the markets. But there's also been a huge derivatives market. We're actually at a point now where the Bitcoin derivatives market, daily traded volume is much higher than the spot market, meaning physical Bitcoin that's traded. And I think we're going to see this further decoupling as more people want to trade paper Bitcoin or effectively derivatives. And that has, you know, doesn't necessarily have a positive impact on price. Just because there's more volume doesn't mean the price goes up. We're now sort of in this interesting climate where the tail is wagging the dog, meaning what's happening in the derivatives market is defining what happens to the Bitcoin price in the spot market. And I think we're actually talking at a really opportune time because in 1 day's time, tomorrow, Friday, June 26th, $170 million of CME futures products expire. So we'll see what happens to the Bitcoin price when those futures expire. You have all that data, so like traders are going to do things around that. And Bitcoin's just getting started. Last year, the Bitcoin derivatives market was $3 trillion initial traded volume. This year, Q1 was $2 trillion. I think we're going to be $10 trillion by the end of the year. So we'll triple the volume of derivatives traded. But as we look at sort of the global futures and options market, Bitcoin's not even on the chart yet. Maybe by the end of this year we will be. But this is going to be a huge area of growth in this industry. And look, technology, here's really important thing. Technology doesn't get rid of the need to own physical assets, right? If we think about the internet, if we think about, you know, the ability to make things digital, everything that is digital still has a tie to the physical world because it requires compute and connectivity. Every transaction, every push of data from the network to your phone or from your phone back to the network requires compute in the form of silicon and requires energy in the form of electricity. And so what's really interesting here is people are going to try to integrate in different ways, whether that's vertically or horizontally, but you also start to see these different ways that we can start to tie this ecosystem together through financial products and financial engineering. So I'll put this all online. There's some stuff here around like the cost of capital if anyone's interested in CAPM and Miller Modigliani and like the impact of the cost of equity versus the cost of debt. Happy to talk through it. But at the end of the day, here's what I think is really interesting and kind of mind-bendy to think about because we like to sit in our little crypto echo chamber and it feels very, sometimes it feels very limiting. But here's where we're at. Bitcoin started really squarely in the world of finance. I came through it through commodities. Most of the people I work with at CoinShares, we all come from the commodities world or from the finance world because at its core, Bitcoin is a financial network. It's a network for value transfer. But where we're going is very different. Bitcoin is already starting to create a market for compute and connectivity in the form of what's happening in the mining space and what's happening with hash rate derivatives and these other types of financial instruments. And Bitcoin is also starting to create an opportunity for the energy industry. The energy industry in the US in particular has been hit really hard by COVID. I think a lot of that energy industry will hopefully find a way to be reemployed in the Bitcoin industry. And I think this could potentially be a huge catalyst for the government investing more resources into the Bitcoin industry and potentially viewing it as a net positive contributor to the American economy. Underpinning all of that is a strong layer of cybersecurity. As we sort of already talked about, I think cybersecurity is going to be the defining theme of the next decade, and geopolitical conflict is going to shift from physical conflict over borders to digital conflicts in cyberspace. We already see this through all the DDoS attacks that have been happening over the last few weeks. And this is the way that I think Bitcoin eventually becomes part of the global military industrial complex. At the end of the day, the most valuable thing you can have as a country is the ability, or a company, right, is the ability to control what is communicated, how it's communicated, and who it's communicated to. And at the end of the day, transferring money, finance, right? It's just another form of transferring information. It's a way of communicating, but you're communicating about value. And so the ability to preserve your access to the global financial system is going to be a competitive resource because Bitcoin is already inherently competitive through the way the network works. I think it's only going to become more competitive. And I think it will be interesting to see, there's now a new battle over encryption raging, that the government wants to have discretion over how hardware and software is developed in order to be able to censor and sort of intercept messages lawfully. And I think Bitcoin's going to go through the same pressures. We're already seeing attacks on Bitcoin. There's a bill on the floor right now, which would require every Bitcoin transaction that touches US shores, whatever that means, US jurisdiction, to be tracked and traced and logged. I think this would be massively detrimental to Bitcoin. But I think, again, this next decade, we're going to see a lot of integration. We're going to see the Bitcoin market start to become a compute and connectivity market and an energy market. And I think ultimately, Bitcoin is going to be a critical component of the geopolitical game going forward. Even if it's not in the form of Bitcoin itself, it could potentially start in the form of central bank digital currencies or other sorts of permutations of this technology. But eventually, I think all roads do lead back to Bitcoin. That's my personal perspective. Feel free to disagree. I'm by no means forcing it on you. And so that's what I'm excited about. What will the future look like? Final thought. A lot of you have probably read the book Snow Crash. If you recall, one of the main antagonists in Snow Crash is a gentleman who lives aboard a ship and owns all of the server infrastructure. So even though all of these people could live in this beautiful metaverse and have this digital world, because someone owned the physical infrastructure that operated that digital world, they were ultimately beholden to the people who ran that infrastructure. Server racks, compute and connectivity. And so the question is, in the future, who will own compute and connectivity and who will be able to control your ability to communicate financial value? Open question, but my bet is it's not just going to be us anymore. So I'll end there. My email's here. You can find me on Twitter. I have open DMs. And I think we have time maybe for one question. Jeremy, I'll throw it back to you.
Yeah, absolutely. Thank you so much, Meltem. That was incredible. Lots of positive feedback. If anybody has questions for Meltem right now, we have just about 4 minutes or so. So go ahead and put those in the chat and she can get that answered.
Yeah, cool. Facebook is the new Standard Oil, says Oscar. Yeah. I agree with you. A monopoly of data. Google disagrees. Looks like Docker, lol. Your name is fuck you. I don't know what to make of that. We'll go with it. Yay, speculators. Yes. Thank you, Oscar. It's all vanity. Ecclesiastes. The Bible, I'm not a religious person, but the Bible's full of good quotes. Like, I'd never read the book of John, but it opens with, in the beginning, there was the Word, and the Word is God. And what that was about is language is code. I just had a conversation with someone earlier this morning about language is code and why crypto has its own vocabulary. It's so fucking rad, honestly. I love this industry because it's so weird, but you could get real esoteric. Let's see. Data centers more eco-efficient. Carbon programs for data centers. Not sure about that. I think inherently, if you're interested in the future of energy, I've spent a lot of time thinking about this. I was supposed to go work in the oil industry after I left grad school, but I was like, I'm going to go work in Bitcoin. I'm never going to make any money. It's going to be not very successful, but I'm going to do it. And then it kind of worked out. What I think is really interesting is thinking about energy economics and the impact of nuclear technology. I think ultimately either fusion or fission is going to be the way the world has to go. And if you like sci-fi books, there's a great book by Charlie Stross called Accelerando that's basically about, it's a sci-fi book, super fun, but it's loosely about energy economics and how at some point the amount of compute and connectivity we'll need will consume all energy created on Earth and what that means for interplanetary sort of conquests. Very interesting. It also ties into paperclip theory and AI, if any of you are into that. Dorky. Environmental only, proof of work, proof of stake should be the standard. Here's the issue with proof of stake. proof of stake is effectively an oligarchy because people who have the most coins get the most votes. I've yet to see proof of stake voting system that gets away from sort of this impact of landowners, effectively, like digital landowners being the ruling class. I think the other issue we've seen, and I published a research report at the start of last year called Power Protocols and Power, Politics, and Protocols. That was exactly about this. In proof of stake systems, voter turnout is exceptionally low because most people are just disinterested, and generally I think voter turnout's pretty low on most issues. So if you're interested in this topic, I recommend you check that out. It's called Power, Politics, and Protocols. There's also a great set of academic research that's being done around the topic of proof of stake and how it impacts the security of the network. But again, I have fundamental concerns about if you're not expending energy to secure the network, and it is in a competitive market, I'm very concerned that the security of the network will not be as high, and that people who vote in this proof of stake system can effectively vote to roll back the chain, which destroys the guarantee of immutability. And I think, again, like for certain instances, that may be fine. Maybe for a payment system, that's fine. But for a value system like Bitcoin, I want immutability as a property because that's the whole point, right? I don't want to be beholden to the system or to a ruler who can change the rules of the system. And so I think, again, in the application I'm most excited about, which is Bitcoin as a store of value, I think it's extremely critical that to preserve the integrity of the network, that people have to expend tremendous amounts of energy so that it's nearly impossible to coordinate a 51% attack. But if anyone wants to nerd out about that, like there are people who are way smarter than me who've written academic papers on it that are very in-depth. So thank you for your time. I think I'm going to be back later for the startup competition. Thank you for humoring me with all my oil talk, and give me a shout. I'm on Twitter at @melt_dem. Thank you so much.
Thank you,
Thank
Meltem.
you,
That
Meltem.
was
I really
incredible.
appreciate it. Yeah, everybody, pretty exciting stuff. Meltem obviously is doing some incredible things. Thank you for participating. I know you're going to be at the pitch competition coming up as well. So we have 5 really exciting startups that are going to pitch to you in a Shark Tank style type of competition. So it should be really interesting.
All right.
But yeah, it's going to be great. If anybody wants to follow Meltem, you have her information there. Thanks again. All the feedback we saw in the chat was she's incredible. I think somebody even said a badass. So congratulations. And thanks again for all that you've done for this industry, honestly.